Hi, this is Zam here with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 25th of January, Burns night, and we're starting off with the FTSE 100, which is still struggling beneath the 50 and 200-day moving averages. Support there, 74.20 at the floor of that channel there from August, but we need to see an end-of-day close through that 75.65 area. If we can get through that, then it would be up to the 77.70 area, maybe by the end of next month, but can't rule out a break of 74.70, leading not only down to the old October support, 7300, but potentially a worst-case scenario move down to that Red August support line projection at 71.70. But at the moment, still hoping that we'll stay in that, above that 74.20 area. The RSI still below the neutral 50 level at 43, not helping. Onto the DAX, and already had a stellar run. We've also broken that line of resistance from December. That is around 16,600, which is also the area of the floor of the channel above 16,600. We're looking for this market to head up to the top of that October rising trend channel, 17,900, as soon as the end of next month. If we do break down, then 16,300 recent support and the old resistance from back in the summer would be the favored destination. RSI well above neutral 50 at 59, so in a good place. The next market is the Dow, and here, after having a little probe through the 38,000 area, we're just back below it, but still above recent support, 37,000, and ideally we stay above the floor of that rising trend channel from October, 37,500, ahead of a move up towards the October resistance line projection, 39,300 by the end of next month. Bitcoin has been slightly cooling off after the ETF news, but so far it looks as though we found support at and above old resistance from November, 38,000. Still want to see this market break back above the 50-day moving average. That would be the big fresh signal for the bull run that we've had since October. Otherwise, perhaps we have to have more of a consolidation between 38 and 43,000 before the market settles down. Onto the stocks, and the cupboard relatively bare at the moment. Anglo Asian is the first contender here, and here looks like we've got a mix. Well, I suppose we had broadening triangle base, recent support there for the shares around 53 pence. So therefore today's gap higher, bear trap gap reversal. Probably want to see the shares break the 50-day moving average at 62 pence ahead of a potential move up to 84 pence by the end of next month, or 4 to 6 weeks after that. In terms of the RSI window, we've got an uptrend line there from way back in July, so that is suggesting that perhaps the corner has been turned, today's RNS notwithstanding. Moving along to Beowulf mining, and here we had our initial suspicion that this market was turning around. It looks like it has heard that particular wish, and 1 3/4 pence, the initial target there. We're also holding above the 200-day line at 1.63 pence. It means that we're looking for the next target up, which could be up to the line I'm just drawing at the moment, 2.4 or 2.5 pence by the end of next month, especially while we're above that 200-day line there, the black line there, 1.6 pence. Next up is another potential turnaround situation, which still was sort of work in progress here. Neckline resistance there around 0.93, so we want to see an end of day close above that to then allow the shares to fill the gap up to the December gap up to 1.7 pence over the next few weeks. But the key here really is breaking that initial January peak and making progress from there. The stock of the day has to be Helium One by quite some margin, with better news on the helium and indeed hydrogen front. Interesting to see what the shares have done so far, which is head up to the top of a triangle, micro triangle there in place since the first week of January. We obviously had the risk reward play that the old placing level was worth a go, and that's proven to be the case. Obviously it just depends how much churn is in there at the moment. 0.32 looks like the significant level on an end of day close basis to be broken. If we can do that, then it could be up to 0.4 pence. We want to see the shares remain above the floor of the big gap down that we had back in November. Floor there at 27.5, so no end of day close back below that. Otherwise, we would then assume that we were heading back down again. But 0.32 and 0.4 is a best case scenario target on the upside at the moment. for Helium One. Onto a stock which I've covered quite a few times, largely because it's been going well, but we had our initial target there with Orosur up to 5 pence. The shares then dipped back to old resistance, post-November resistance, 3.1 pence, and it bounced quite well, so looking for a retest of the 5.5 pence area. Above that, the big target for next month, perhaps as high as 8 pence here, but the key is staying on the right side of 3 pence. Next up is Petrofac, which looks like it's having another go at the upside. Here we had a failed push through the 50-day line and a failed move up towards the old March support there at 45 pence, but we got rather near. The view now is that while we're above the 50-day line at 28 pence, we're looking for a retest of the 40 to 45 pence area. Old support becoming new resistance. Finishing off with Rockfire, which has been the strong silent type in terms of the recovery of late, which is good. Above the 50-day line there at 0.26, we're still looking for a move within that broadening triangle from back in April last year. That's heading towards 0.4, and we're looking for that by the end of next month. Nice RSI bounces so far in January at and above the neutral 50 level. That's it for me today. More updates tomorrow.